Thank you, colleagues. We are excited that this afternoon we'll be having yet another very important discussion, one of our business series that Jim Roberts conducts on a monthly basis in conjunction with one of our lead partners, League of East African Directors. HLB Jim Roberts is an accounting, audit, and management consulting firm. We've been around for over two decades now. And as part of our effort to make sure that we keep our clients and the stakeholders informed, we run our Business Hub series where we focus on topical issues or emerging issues, either in the profession, in business, and generally in the economic environment in the world. So today, we'll be privileged to have our discussion around having streamlined ESG and sustainability reporting. My task is a simple one, to give a highlight of what we do as Jim Roberts. I've already mentioned that we are accountants and management consultants. Jim Roberts has been involved in mainly audit and assurance, tax advisory, and financial strengthening, which is the bigger bit of the other services that we provide under consulting. We provide capacity building. We also do strategy development, board evaluation. Recently, we've had a couple of assignments where we do board evaluations for entities that are really focused on ensuring that their governance is performing to the best that it can. So, ladies and gentlemen, I want to take the opportunity to thank you today for registering and especially our panelists for sparing time to join us in delivering this very important topic that I've just talked about, and that is streamlining ESG and sustainability reporting. My partner James will introduce our panelists. I want to take the opportunity to introduce him. James, CPA Dr. James Okello Onyoin is our managing partner at HLB Jim Roberts, and he also doubles as the Chief Executive Officer of Jim Roberts Consulting Limited. James, you are welcome to moderate this afternoon's webinar. And I believe that our panelists will be able to share with us great insights. Thank you.
Yeah, thank you. Thank you very much, partner Julius. I'm really delighted and very excited. This is a very, very hot topic, not only in Uganda, but around the world. We've got people who have registered for this webinar from different parts of the world. I want to thank HLB International. They actually promoted it on our international channels. I have people who have registered from HLB Zambia, HLB Lesotho, HLB, I think, Ethiopia, and we have other people from various central banks, including Ethiopia and so forth. So all around the world. So it's really an international webinar this time, very, very international webinar. So I would like to take this opportunity to introduce our panelists, and I want to thank them for making the time. And also to invite everyone who's logged on today. We appreciate your participation, and we're looking forward to a very engaging conversation. First of all, I want to thank Bettina. Bettina, I know you are traveling, you are now in Prague, and we're in the middle of a conference, but you accepted to get out of the conference and join us. That is really most appreciated. Bettina is our for HLB International. She's our Global Director for Professional Standards and Sustainability Assurance within the HLB network around the world. She's responsible for the network's quality assurance program, which guarantees compliance with Forum of Firms requirements. She has developed a pragmatic approach to training and development within HLB and leads outreach initiatives on training Of course, she has trained HLB in Jim Roberts many times. And also, she's in charge of various regions, including, Africa in totality, Latin America, South America, Caribbean, and so forth. But most notably, Bettina represents HLB International in the Transnational Auditors Committee, and that's a committee of the International Federation of the Forum of Firms into the International Federation of Accountants.
I can't hear you anymore. You're breaking up, but
Thank
let
you
me
so
just
much.
say I'm very happy to be with you all. We are actually at the HLB International Conference in Prague at the moment, Audit, Tax and Advisory Conference. And as you can imagine, ESG is a big topic. It's a topic that we've been talking about literally all day this morning. And it's unfortunately a topic that a lot of people are still disregarding. So I was very, very pleased when I got the invitation, and I was very, very pleased when I went through the list of really quite insightful questions that we are going to be answering today. So very much looking forward to being part of the conversation. Thank you for the invitation and looking forward to it.
Thank you, and you're welcome, and we look forward to seeing you in Uganda. I know you were here some time back. Thank you. Okay, the next panelist we have is Peter Senyange, who's the Chief Finance Officer for Postbank Uganda. We all know Postbank. It is our bank here in Uganda, and is really in the leadership team that's transforming the bank into a value driver in the Ugandan economy. Peter is a strong advocate for integrated thinking in all corporate decision making, as well as business leadership development for accountants globally. He's a proud alumni of the CEO Summit, of the CEO Apprenticeship Program, where I'm also privileged to be a trustee, and also CFO Academy with the Matabakas. He's a professionally qualified accountant. He's a CPA certainly, and also an ACCA. So we're looking forward. Peter, you're welcome to this panel today.
Oh, thank you, James, for having me. And perhaps I'll explain to Bettina why most people ignore ESG as we go ahead.
Yes, certainly. Thank you. All right. So last but not least is Eva Sewagude Jagwe. I hope I pronounced that properly. She's the Director of Strategy and Innovation at the Uganda Bankers Association. If you are not in Uganda, that's the umbrella organization for the banks in Uganda here, especially commercial banks, a role that she has played since April 2020. With over 4 years of experience in this position, she has dedicated herself to driving strategic initiatives and fostering innovation within the banking sector in Uganda. She leads efforts to develop and implement forward-thinking strategies that enhance the efficiency, competitiveness, and sustainability of member banks. Her work involves collaborating with various stakeholders to identify emerging trends, integrate these new technologies, and promote best practices in banking. Our commitment to excellence and innovation helps shape the future of the financial services industry in Uganda, ensuring that it remains resilient and adaptable in an ever-changing global landscape. You are most welcome, Eva.
Thank you very much, Doctor, and I'm very happy to be part of the conversation and to be part of this webinar.
Yes, thank you, thank you. Really, most welcome, all the panelists. I want to appreciate you for everything that you all the effort that you put together to make sure you make it at this particular webinar. Okay, so let's start straight with the serious business. And I would like to start with the only gentleman on the panel today, that is Peter. So I want to ask Peter about 3 questions at a go. The first question I want to ask, you just take notes. The first one, I think we don't want to make any assumptions. just help us to understand what is ESG and sustainability. Let's start from there before we go into reporting. What is ESG and sustainability? And also, what is ESG and sustainability reporting? How can organizations use the new international financial reporting standards, IFRS S1, IFRS S2 standards, to streamline their ESG and sustainability reporting? I'm going to give you quite some good time. I can allow you to spend between 12 to 15 minutes just to set the foundation so that we all know what is ESG and what is ESG and sustainability reporting before we get into the details. Thank you. Other details.
Okay, it's afternoon here. Good afternoon, everyone. I will throw a small spanner in the works. I will let Bettina explain what ESG is. I'll explain what sustainability is, and a bit of how exactly the second part of your question, how organizations are using the new standards, IFRS S1 and S2. But in your opening, James, you mentioned that there could be many who are new to the topic of sustainability, ESG, and so forth. And that's why I would like to display a couple of slides just to help me navigate the question, if you don't mind, in my 12 minutes. Okay. Right. Okay, so I hope everybody can see my slide. My slide is just going to talk about IFRS S1 and S2, but the way I approach this, say that again, you can see it?
Yes, we can.
Okay, thank you very much. Now, what is sustainability? IFRS S1 and S2 are new standards that have come at the end of a long journey on sustainability. As my next slide will show, sustainability is about largely three things. The background of sustainability back in the days was every time you received corporate information about the company you invested in, you lived with, you worked with, you mainly received financial statements, the way accountants typically used to prepare them, the way boards released them, and so forth. And some of the thinkers kept saying to themselves, that only talks to one type of stakeholder, the investors. And secondly, companies are not disclosing their impacts on the following three things. These slides are going to just talk to you about three things. The first one is a bit controversial, just the politics of sustainability reporting. This slide is just trying to tell you why the standards are structured the way they are. And it's important you understand why the standards IFRS S1 and S2 are structured the way they are, because when you understand why they look the way they are, you understand exactly what the disclosure aspects are. But let me start with this. This is probably the slide I wanted to get to the most, James. The general principles of sustainability have not changed. Every company, every organization has the following impacts in the environments in which it operates. It has an impact on the economy. It has an impact on the society. It does have an impact on the environment. And it's very deliberate. All shareholders are internal looking. How much revenue do I get out of the company? But your company does have an impact on the economy, on the society, and on the environment. Now, the journey, the general discourse around sustainability is around these three aspects. The issue is, I think that's contentious around the world, and just to preempt my discussion with Bettina, is why people sometimes ignore ESG, as she did say. It's not really deliberate. It's just that if your company's operations, how your company's operations deal with these three aspects, determine how a jurisdiction will respond to ESG or any other framework that measures sustainability. So, but the general principle is sustainability is about your company or your operations impact on the economy in which you operate, on the society in which you live or where your business is located, and the impact on environment. Now, all the other frameworks that we use around sustainability are trying to measure these three impacts. So, James, I think without giving a coherent or one-liner definition of sustainability, I have explained the concept on those three things. Now, the IFRS S1 and S2, your questions asked, IFRS S1 and S2, they're the new IFRS standards, but I'd like to explain the part of the journey that they took to arrive at why they look the way they look like. So now to go on to your second question. This is the problem with sustainability. If you see the slide I'm displaying, some of you may be familiar with these logos. Some of you, they might be new. These are all frameworks, or some of the frameworks, not all of the frameworks, that can be used to measure sustainability, to measure those three things in different degrees. You've got so many, there are protocols, there are frameworks, there are advisory, basically there are equator principles and so forth. But all these things, be they the GRI, the equator principles, the SASB, all of them are measuring something around this triangle. And the difference with the frameworks are, the difference with the frameworks is that you might find the Global Reporting Initiative touches all three. Then you find the task force on climate, on climate, that touches mainly environment. And then you find some that's an impact of the three. Now, my take on how well the sustainability framework looks like might be different from yours, but the general principle about sustainability is every organization has an impact on these three things. Now, why does sustainability matter? Why does sustainability matter? Let's take it in practice today. If you talk to any stakeholder, sustainability is really built around the stakeholders your business runs with. All our businesses are at the simplest. You have the first sustainability dashboard I ever saw at that time, not so many years ago, about 15 years ago. One of the most important things they wanted you to disclose about your impact on the economy is how much taxes you were paying into the economy. Now, today, if you look around sustainability frameworks these days, you may not find that as a measure for some of them. But there was already recognition even back then that an organization doesn't just live to serve its shareholders. And then there are those organizations that also don't necessarily have shareholders, but they have trustees, or they are not profitable, or they are non-profit. But these three diagrams, every organization has to have them. Now, does this impact how customers and other stakeholders respond to the organization? Definitely. So this is the broad concept around sustainability. Now, to use the rest of my time, of all these frameworks here, IFRS S1 and IFRS S2 depend or are largely built off what's called the Sustainability Accounting Standards Board, or what's called the SASB. But to make it easier, let me move to the next slide and just explain what I mean. This is what drives S1 and S2. If you understand these principles, you quickly understand why S1 and S2 look the way they are, and what then you're required to disclose when you do report. So S1 and S2, many sustainability interested bodies got together, including with IFRS ISB, and created the International Sustainability Standards Board, which has trustees. They are not mandatory at this stage. A jurisdiction has to adopt them. So you don't have to create your IFRS compliant financials and then also have these. But there are lots of discussions around the world to make sure that they are jurisdictions adopt them. But to explain briefly, he only gave me 12 minutes, so I want to rush through this. I have 3 frameworks that I'm displaying. There's the Global Reporting Initiative, which is the most, it's broadly used. It's a universal set of, comprehensive set of standards for sustainability reporting. I've used it for many years. And then there is this one, it's called the SASB. So the IFRS S1 and S2, in the guidance for those 2 standards, in case you have anything specific that is sustainability reporting related that you can't find in IFRS S1 and S2, the guidance tells you default to what's called the SASB. And this is my first contention with these standards. This framework of SASB says they are very industry-specific standards, but the problem is they only help businesses disclose material sustainability information to investors. Now, that might be subtle. You may not have got it, but let me explain the difference between SASB and GRI from a user perspective. The Global Reporting Initiative, the target group for the Global Reporting Initiative are users that include not just investors that invest in your company, but also other users outside. The SASB standards are targeted to whoever provides you capital for your organization. And the principle of the SASB standards are targeting anyone who funds or your cost of capital. The SASB standards are specific to your investors. The Global Reporting Initiative asks you to disclose your sustainability information with many other users in consideration. And then there's the last one here, the Task Force for Climate-Related Financial Disclosures, which is the biggest driver. The biggest driver here, it's only talking about disclosing clear, comparable, and consistent information about risks and opportunities presented by climate change. So if you look at generally what the 3 do, you can clearly see each one narrows down on some aspect. The last one I've displayed, the Task Force for Climate-Related Financial Disclosures, is purely climate. SASB, it's very industry specific. It's one of the nicest frameworks with metrics, but it has very industry specific standards. And then the GRI, which is a global one. So quickly, why it matters. The GRI, the why is, and I was just trying to explain to Bettina why sometimes ESG is not adopted. The GRI, and why I personally adopted it for my organization, it just tells you organizations must be transparent and accountable about their broader impacts on sustainability issues. That's mainly why GRI matters. So you have a healthy balance between your impact on environment, your impact on society, and your impact on the economy. The SASB focuses on financially material factors. That's the key word, financially material factors that affect the value of a company. But in whose eyes? In only the eyes of its investors. That is the first huge deviation. Now, IFRS S1 and IFRS S2 were designed or are targeted based on the SASB approach. That's why you often hear, sometimes when people are promoting ESG, especially management consultants, they will tell you that if you don't adopt ESG, your cost of capital will rise. That's where that linkage comes in. It's because which user group you're targeting. Now, the task force for climate-related financial disclosures, on which IFRS S2 largely is best, it just helps companies articulate and inform investors about their climate-related financial risks. Now, the question is, what happens to the others? And on this one, IFRS S2 is best. So the next one. These are some of the next one is briefly short. Some of the examples of what GRI would ask you to disclose. Now you notice there are interplays between some of them, but because of the measure that's used on what to disclose, that's why these frameworks are very different, but they influence how we move. Now, these are the benefits. Personally, we adopted the GRI because, well, it's widely recognized globally, used, it's suitable for an organization regardless of your size, your sector, your location. The SASB, when you go to the SASB website, you have, they've done good work. They have clear metrics for about 77 industries. So they've done a lot of work there. Now, but it helps businesses identify and report on sustainability issues, but only those that impact your financial performance. So if you have a sustainability issue that doesn't impact your financial performance, it's not within the scope of the SASB. Now, remember I said at the start, IFRS S1 and S2, this is their definition of what should end up as part of that scope. Now, the task force for climate-related financial disclosures focuses on the financial implications on climate, which is critically important for risk management and investment decisions. Now, finally, you can see that the convergence of SASB and the task force for climate-related financial disclosures now comes, so they both talk about financial implications. If it has no financial implication, probably wouldn't be in scope of IFRS S1 and S2. Now, lastly, these are the challenges here. Generally, broadly, the GRI, obviously very complex, very resource intensive. The SASB, like I said, is only limited to issues that are financially material and does not cover broader impacts. The task force for climate-related financial disclosures requires in-depth analysis for climate-related risks, which can be complex, and to evaluate and to quantify. So when you talk about certain aspects on the environmental aspects of ESG, you will have a lot of scenario analysis. So that came out of the task force for climate-related financial disclosures. Now, here's when to use it, and this is where most users will come in. So GRI is very ideal for organizations needing a detailed and broad-based disclosure on their sustainability practices. Whereas the SASB is only best for organizations looking to communicate sustainability performance to investors. So IFRS S1 and IFRS S2 are based on this premise. Now, you might be on the call and you're asking, okay, if I don't source any money from a stock exchange, how does this then affect me? And maybe that's why they are not mandatory. The task force for climate-related financial disclosures is limited for issues that are financially material, but does not cover broader impacts. And then, lastly, what to be aware of. I think what the International Sustainability Standards Board has done is to bring the two together. They've brought currently SASB and the task force help to contribute to the first IFRS S1 and S2. And I know they're in talks now with GRI to bring in the others. But I just want to close with three things that I know the last question you asked me was, how do they streamline ESG and sustainability reporting? I've given you the basics of how they do it. On these principles is a lot of ESG reporting, sustainability reporting, and IFRS S1 and S2 on these principles are the best. So James, if I still have more time, I can carry on or I can pause for now.
Thank you very much, Peter. You really helped us to get the context, and I would like us to continue first. Then I'll come back to you in a moment. Thank you very much for highlighting the difference between the key frameworks. There are many, of course, but mainly zeroing down on the Global Reporting Initiative, which you have told us is really, broader, more encompassing, and then the one from the Sustainability Accounting Standards Board, which you say is more focused towards financial reporting, and then the task force on climate-related financial disclosures. So all that's really, really very, very useful information. Thank you for sharing that. I'll be getting back to you. But I want to first go to Eva. Eva, my question to you is the Uganda Bankers Association recently launched the banking sector ESG framework. The UBA recently launched the banking sector ESG framework. Can you tell us a little bit more about the framework in just about 5 minutes?
Thanks, Doctor. I think borrowing from what Peter has said, I'll take certain assumptions in understanding various concepts, the importance of ESG, why we must do what we do, and so forth. So based on that, on the various reporting standards, and I think the ones highlighted by Peter are just some of the few, but we have local or regional guidelines, we have international guidelines, we have, and so forth, because the banking sector is made up of banks which are local, regional, and international. So the framework was developed in such a way that it embraced all sorts of geographies and all sorts of environments in which the banking sector is. But principally, what the UBA or the banking sector was trying to do is to strengthen our commitment as a sector or an industry, and to be able to communicate lucidly in a way that we shall comply in respect of ESG. Not only to comply, but to make sure that the various aspects that underlie the framework are going to be implemented by all financial institutions, and other UBA, these are all the commercial banks, as well as the tier 2 and tier 3 financial institutions. They will comply and they'll be able to implement them consistently through the banking sector. Now, briefly talking about the ESG framework. The ESG framework is based on 4 key principles. The first being the one that speaks to governance and the governance framework, which is P1. And this one is looking at making sure that the governance framework embeds all aspects that speak to governance, how we constitute boards as an example, how we manage the structures of organizations and so forth, that we are consistent and conscious of all considerations in respect of governance. Pillar 2 speaks about sustainable finance, and really being a financial institution, that's really obvious in how do we source and apply or use the finances that we have, and how do we sustainably finance our employees or our customers and make sure that they do things in a sustainable manner, that we can be able to provide the financing to good business, but also help those ones who are not in very ESG compliant businesses to be able to transition and move forward so that they can have least hurt or negative impact on the environment. The third pillar is looking at ESG risk management. I think Peter spoke about this one in a lot of detail, to be able to identify risks which might come up and to mitigate them or manage them. And lastly, is looking about reporting and disclosure, which goes to the heart of this very webinar. What are we going to do to ultimately change the structure of the banking sector to be able to report in a way that's consistent in respect of environmental, social, and governance aspects, and to make sure that we can enable sustainability across all the organizations or financial institutions within the sector consistently. So that's why we have the framework. The framework has the guidelines, the pillars, the activities, the actions, and in essence, the work plan we are going to take, and I think I'll speak about it later, the work plan we're going to take as a sector to make sure that we move in tandem and that we are consistent in our commitment to make sure that the sector itself is alive to ESG concerns, and that the activities we undertake consistently speak to that mandate. Thank you very much, Doctor. I think my 5 minutes are up.
Yeah, thank you. Thank you very much for keeping time as well. Most appreciated. And thank you for sharing the experience in the banking industry in Uganda. And for those of you who have been following the developments, you'll agree with me that Eva and the team at UBA, they are really helping to drive change in this area. So we appreciate that and for sharing that. I'm sure other sectors will follow suit, and it will be very good if every company really can start looking at what is the impact on the environment, what the impact on social, society, and also governance issues. So this is extremely, extremely appreciated. I would like now to go to Bettina. what strategies, this question for you, Bettina, what strategies can companies employ to enhance stakeholder engagement and transparency in their ESG and sustainability reporting processes in line with IFRS S1 and IFRS S2? Let me just repeat it again and repeat it. What strategies can companies employ to enhance stakeholder engagement and transparency in their ESG and sustainability reporting processes in line with IFRS S1 and IFRS S2? Bettina, to you in 5 minutes.
Thank you. Well, I would say before I even start, whatever I'm going to say is valid for the people who apply IFRS S1 or S2, or who are even starting out on their ESG journey, let's put it that way. But it's also valid for people who might have to report in line with CSRD, either because they are in the European Union or they might be in the value chain of a large organization that is reporting in the European Union. So I would say it is really valid for all of those. I think the first thing you have to understand is we're talking external stakeholders, but we're also talking our internal stakeholders. And very often what we see at HLB when we talk to clients, when we also talk to our member firms, is that a majority of clients have the first reflex to say, maybe we're moving into ESG reporting. We don't really have that much information. We don't really have that much training. We don't know about it. Let's position it within the finance department. But then again, that's not the end of the story, because in order for ESG reporting to be successful, we really want to have a framework, a little bit like the one Eva mentioned. It's not just a finance department. You should also have a person or a team that is really in charge of ESG or of sustainability. And then that person is going to be working with the various specialities in your organization. For example, on the G, they might be working with a board. On the S, they might be working with HR. If you have more than one site, let's say you are even in several countries, or maybe you have several different products or several different services lines, you really want to make sure that you have very broad representation and very broad buy-in from all the important stakeholders already internally. And then externally, the same thing. If you have to report on your value chain, that means you need to ensure that you already identify the key, value chain components, clients, and then also suppliers that you want to consult. They need to understand what exactly you are trying to do. It also means, consulting and being transparent with your community. So as you can see, internal and external, there is a lot of communication going on. There is a lot of transparency that is necessary for all of this to happen. And then, of course, involvement of all the stakeholders to make sure, you collect data in the right way, in the right format, in a coherent and consistent format, and then you consolidate. Using established frameworks like the ones that have just been mentioned. If it's not mandatory for you to use the IFRS S1 and S2 or CSRD, for example, you might want to go to GRI. That's what a lot of people do, but use a recognized framework that will give you credibility, that will also give you credibility in terms of training, in terms of capacity building, internally, externally. And then if you're doing good, you are perfectly entitled and in the right place to communicate on what you're doing. The reasons why I said not everybody knows is because in some parts of the world, people will not do anything until there is an obligation, until it becomes mandatory. But those people, for example, who voluntarily already use GRI, or maybe they're already reporting in line with IFRS S1 and S2, I mean, they should definitely communicate, and they would be trailblazers in that ecosystem. So that's what I would say. For me, there are three buzzwords. It's really about clear communication, transparency, and getting all the stakeholders, internal and external, involved.
Thank you, Bettina, about that. Thank you for sharing that. I think what I've picked is that in this whole process, you have to think about who are the people that you deal with, whether they are customers, whether they are suppliers, and make sure you engage them. And whatever framework you choose, make sure that you're able to gather the information which will help you to communicate, to eventually make reports that will speak to the interests and what all the stakeholders are interested in. So thank you so much for sharing that. We're going to run a poll now for a few minutes because we want to get a feel. Now that we've heard from all the three panelists, I think, and we've already set the foundation for these discussions. We're going to run a poll. We ask you to respond quickly to that poll. Participants, I will give you, I think, 5 minutes to do that. We're going to put up a poll. Please respond quickly, and then we'll display the results, and then we'll continue with the discussion. Thank you very much. So technical team, I would like you to run the poll. Thank you. So please respond to the poll within the 5 minutes. Thank you. Okay, the 5 minutes are nearly over. I hope you have answered the last questions. Okay. Okay, I think we are more or less there. Partner Julius, are you around? Yes, I will ask Partner Julius here to take us through the findings so far as per the poll. Just take us through each of the questions and where we are. Thank you. Go ahead.
Okay. So we thank you very much for participating. Question 1 was asking whether your organization uses ESG reporting and sustainability, and 37% said yes of our participants, and then 63 conversely said they do not use or gave a no. Question 2 was on whether your organization, what is your organization's biggest challenge in implementing ESG and sustainability reporting? 43% of the participants said data collection and management, 39 aligning with multiple reporting frameworks, and then 22 ensuring data accuracy and reliability, and stakeholder engagement was 34%. The scores. Then we also had the question number 3 that was asking how familiar are you with IFRS? Technical desk has withdrawn the questions.
Okay.
Question number 3. Number 3 was, how familiar are you? IFRS S1 and S2 standards. And
could you just put those back up on the screen, please? Could you put back the poll on the screen, please?
The poll, okay. Okay, the technical team. Okay, I think we are there. But put up your machine first. Okay.
Okay, so sorry about that, Hitch. So I was asked, going through the results, question number 3 was how familiar are you with IFRS S1 and S2? And only 7% say they are very familiar, 34% somewhat familiar, 20% are neutral as far as that is concerned, and then somewhat unfamiliar at 12%, and not familiar at all, 28%. So you can see the distribution of the level of familiarity with the two standards. And then question 4 was how confident are you in your organization's ability to meet the requirements of S1 and S2, IFRS S1 and S2? And 25% are very confident, 24% are somewhat confident, neutral is 28, which is quite high, and then somewhat unconfident or not confident, 9%, and not confident at all are 14. Those were 4 questions, and the last question was on would you or your organization be interested in an ESG and sustainability training and systems implementation? And the majority overwhelmingly said, 77% said yes. So that means that that's an area that is future looking. The interest is high. And then those who need to think about it are 18%, and they know 5%. Over to you, moderator.
Okay, thank you very much. Thank you for that. I think the technical team can take out the results now, but I think what we are picking from the poll are mainly 2 things. One, there is a greater need for training this area and capacity building. Maybe that's good news for us as consultants, but certainly this is something that has come out through the polls. And I want to thank you for the participation. The other one, of course, which surprised me. I thought most people are not yet very confident about IFRS S1 and S2, but there's quite a good number that expressed some level of confidence in with these standards. I think it was 25%. That was really good, and 24% somewhat confident. So thank you so much for the polls. We can now move to the next part of our session, and I would like to start with again Peter. I think just a minute. Yes. Question number 5 goes to Peter again, and this is now saying that how do IFRS S1 and IFRS S2 standards address the integration of climate-related risks and opportunities into financial reporting, and what methodologies are recommended for assessing these impacts? Actually, I'd wanted to give you 5 minutes, but I think you had already hinted on some of these things. You drew the relationships already between IFRS S2 and especially the task force on climate-related this financial disclosure. So I'll reduce your time to 3 minutes. Go ahead, go at it, Peter.
Okay.
I can't hear you, Peter.
All right. Can you hear me now? Can you hear me now?
Are you muted? I can't hear you.
Oh. Okay.
Oh, it's okay. Thank you.
Okay.
Go ahead.
Okay. Well, 3 minutes won't be enough.
Okay, 4 minutes. No problem.
Or even 4 minutes. But your question is, if I got it right, how do IFRS S1 and S2 address integration of climate-related risks and opportunities into financial reporting, and what methodologies and recommendations for assessing these impacts? Okay, so let's see. In 3 minutes, what can I do? Can I quickly display my slide again? In 3 minutes,
Okay.
you can turn me off. Okay, okay. That's the only way we're going to do this. Yeah. Okay. Let's just see. Okay. So you basically asked me a question with 2 standards, but you gave me time for 1. But the good thing is the 2 are related. So I'll explain to the accountants on the call how they are related. Think about what is it called? International Accounting Standards 1, the conceptual framework in International Accounting Standards 1, when it was still called that. This is the same as IFRS S1. IFRS S1's name gives it away. It's the general requirements for disclosure of sustainability-related financial information. Now, remember I said IFRS S1 and S2 are purely related to sustainability-related financial information coming from the sustainability impacts of your organization. Now, the standard S1 says you're trying to disclose the sustainability-related risks and opportunities. Now, the standards all took from they took from the Task Force of Climate Financial Disclosures. That's what they did. And the core content of this task force's recommendation was as follows. I just want to use a pointer so that everybody can follow easily. What is there to disclose? This is one unique thing about IFRS S1 and IFRS S2. The accountants on the call are very familiar with how an IFRS is structured. Starts off with, you know how the 4 aspects or 5 aspects are. Disclosing is at the end of the standard. You have to have a section of measuring it. You have to have a section of recognizing, initial recognition, and so forth. IFRS standards don't have the first 3 or 4 aspects. You go straight to disclosing. So there's an inherent assumption or an inbuilt assumption that you're already doing these things. And that's some of the feedback that you get from especially the smaller users, smaller businesses. But so that's why I have started off with IFRS S1. What are you going to disclose? And James, I'll get to the point quickly. It's basically 4 things. They all came out of the Task Force for Climate Financial Disclosures, and governance, strategy, risk management, metrics, and targets. Those are the 4 things. So for governance, information about the governance, the processes and procedures the reporting entity uses to monitor, this is the most important part at the bottom, sustainability-related risks and opportunities. So those must be disclosed. Then, because there are risks and opportunities, you must disclose the risk management framework around it. Those of you who are in risk management, there's no big change here in generally how you set up your risk management, except this time you have to disclose the sustainability-related risks and opportunities. Now, usually in our businesses, especially us in the financial services, this is a key part of what we do daily. But what we never do, we never identify sustainability risks and opportunities. Then, if you do have these risks and opportunities, related to governance, the organization must have already a written strategy how to manage sustainability-related risks and opportunities. So the same way you govern an organization, those charged with governance must have put in place processes, controls, procedures, and so forth to manage and monitor, identify sustainability-related risks. Then you must have a strategy after you have done so, and then you must have a clear risk management agenda around it. And then this is the last one, you must have metrics and targets. Now, this is how the IFRS S1 and S2 are required. Now, IFRS S1 simply says that every standard under the IFRS S series will follow these 4 matrices. Now, I just want to talk about this aspect I've been describing to you is what's called the core content of your disclosure. Core content, think about it like the foundation of a building, that every standard in the S series will follow this. Now, who's the audience? I spoke to you about this. Those who are familiar with sustainability reporting, I think the only disappointing part about IFRS S1 and S2 is it reduced sustainability reporting to the point where we started, what we were trying to run away from. The audience of IFRS S1 and S2 is purely to what is called primary users. And it says this is to assess the effects of your sustainability-related risks and opportunities on the entity's cash flows, its access to finance, and cost of capital over the short, medium, and long term. Now, let me just discuss this briefly, why it's important. If you look at all the other frameworks on sustainability, they are targeting you to a user outside the organization, but a user who's not really financial in nature, but these have a financial impact. And to Bettina's point, she said most of it, I suppose that's why people are comfortable dumping the sustainability work around the finance team. But in other frameworks, actually, it doesn't quite work that way. So to rush on quickly, these 4 things will always be disclosed. So I said governance, strategy, risk management, and metrics. Now, governance, what to disclose within IFRS S1, it's not so different from what Eva spoke about, except governance has 2 aspects that you must disclose. They want you to disclose the oversight role. So your oversight here would be someone like your board. Are sustainability issues discussed? In other words, strategy, risk management, metrics, and targets, are they set by whoever is running oversight for your organization? In this case, this would be the board. And this thinking here is rooted out of simple corporate governance principles. Nothing should go ahead without your board. And then there are 2 disclosures. Then how does management then affect the wishes of your oversight oversight's conditions? Those are the 2 aspects. I'm just rushing through this. So there's a bit of detail on what to disclose. It's written in the standards. I just want to rush quickly to the second pillar and then come back to that. Then remember I said the core metrics are those governance, strategy, risk management, metrics. Now, as I say, the core content is, if your board has gone that far and decided this is how sustainability related risks affect the business, this is how we're going to do deal with them. Now they have discussed a strategy on how to do it. You must disclose that strategy. That's IFRS S1. And at the end, I'll show you how this links into IFRS S2. And to just use this triangle here, in the disclosure subtopics here, this is the source from Ernst & Young, but it's a very good one. It just narrows it down very beautifully. Your sustainability-related risks and opportunities that could reasonably affect your entity's prospects. Now, you might be asking, what is a sustainability-related risk and opportunity? Remember, IFRS S1 is exactly like International Accounting Standards 1. It gives you a framework in which all sustainability-related risks will sit. IFRS S2, to deal with aspects of climate, is the first IFRS that touches one of these specific sustainability-related risks. And also, within the IFRS, the IFRS S series by the International Standards Board on Sustainability, they've built in a fail-safe that in case they don't address any sustainability-related topic, you default to what's called the SASB, or the Sustainability Accountant Standards Board. Because the Sustainability Accountant Standards Board has specific sustainability matrices for about 77 industries. So it covers quite a broad range of businesses. Okay, so these are some of the, you have to disclose everything according to this triangle up to resilience. So you first of all identify what you could reasonably affect you at this stage, then any current and anticipated effects of those sustainability related risks on your business model and value chain. Bettina touched on this. Then any effects on the entity's strategy and decision making, and then any current and anticipated financial effects. Now, as an accountant or someone charged with governance, you would be thinking to yourself, okay, if I do disclose this to them, then would they, if you're saying this will affect my financial performance, should I then put it in my IFRS standards? IFRS financials. I'll leave that for the external auditors to answer. Then lastly, up there is resilience. Now, sorry, just rushing through. I just want to get to the next one quickly. Risk management has not changed the general structure, but remember it's the next core content. Again, this diagram just tells you the usual processes of risk, understand it, prioritize it, identify the risk, assess it, prioritize it, and monitor it. You have to disclose these processes that you have in your institution to manage sustainability-related risks. Then lastly, metrics and targets. Sorry, I just want to rush quickly. Metrics and targets. IFRS S1 requires you to disclose metrics in these two forms. Every sustainability journey has things you measure or things that you aspire to, what you call metrics and targets. Now, the uniqueness with IFRS S1 is it just makes two distinctions. First of all, if an existing standard issued by the International Standards Board has issued an IFRS and it specifies certain metrics and targets that you must have, you must disclose those. But it also gives you allowance for the second one. For you to deploy, as an institution, you might have your own metrics developed by your own for your purposes, like we do at Postbank, to also display and disclose this. And this will become very critical when we go to IFRS S2. So James, before you throw me off, having introduced the base, now I can quickly get into IFRS S2, climate-related risks and opportunities. IFRS S2 is called IFRS S2 climate-related disclosure. And back to its purpose, its objective, it requires an entity to disclose information about its climate-related risks and opportunities that is useful for primary users of general purpose financial reports in making decisions relating to providing resources to the entity. Bettina mentioned that there is a framework, she called it CDSBS, Climate Disclosure Sustainability Board. Very, very, very popular in Europe. You must report it. You can correct me if I'm wrong if you're listed. So it's really targeted to listed companies, and that's why it's financial by nature here. Now, everything I have said is 4 things. Now, remember, these S1 and S2, they talk about identifying a climate-related, sorry, a sustainability-related risk and opportunity. Now, IFRS S2 is the first of the specific standards. This is just talking about of those sustainability-related risks. They are climate-related risks and opportunities. So, if you're familiar with the TCFD recommendations, it's basically copy and paste, pretty much. But the question was, how do these two go into your financial reporting? And that's why I'm talking about the disclosures. There are 2 risks. They're largely, IFRS S2 largely breaks it down into 2, climate physical risks and climate transition risks. The standard defines those 2 things. But I just want to quickly rush to the end of, sorry, I do have a table here to just compare what they look like. Yes, here. At the end of the, all in the S series, they will all obey this core content: governance, strategy, risk management. Now, if you compare IFRS S2 to S1 on the governance piece, nothing will change. Same as the same. If you have a sustainability-related risk, your board has identified it, has policies, has put things in place, your management as well. So there will be no changes with the 2. Strategy, same as IFRS S1, as I discussed, except you must have an additional one for S2. You have to have, for strategy, identifying and classifying climate-related risks and opportunities that could reasonably be expected. So the language is the same. Then it brings up something here that maybe could be controversial depending which jurisdiction you're sitting with. There's a general expectation that everybody is transitioning to a low carbon economy. So this standard seeks to sort of not make it an expectation, but make it a requirement. Oh, and by the way, if you're implementing IFRS S1, you can't ignore IFRS S2. Then the resilience of that entities in your business model. So there's a lot of modeling in there. And then lastly, climate-related scenario analysis. Again, those of you who've had ESG training and so forth, you saw some of this in there. So IFRS S2 adds these extra additional ones. Where it differs tremendously from S1 is on the metrics and targets. This one, unfortunately, James, will need more than 3 minutes. But this table, I just put that on the screen to just look at some of the metrics that are required for S2 and especially S2 there. Let me just stop here.
No problem. We'll email some of these materials to our participants.
Okay, I'll stop there.
Thank you. Thank you. I really appreciate it. Thank you for making those distinctions and also highlighting when to use, when to use whichever prescription has been given by the standards. But I think all in all, you have to think about the 4 things. Think about the governance, think about the strategy, think about the risk management framework, which is in place, how you're managing your risk, and the metrics and targets. Everything you do should be able to address those 4 areas. Thank you so much for emphasizing that. My apologies if you hear some noise. I think there's somebody with a loud motorcycle passing near my office. I think we can now go back to, oh dear. I just decided to pause a bit. Somebody's passing with very loud music, but we can now continue. They're also in their own business. Yes, thank you very much, Peter, for that. That has been very insightful. I'm sure we'll share some of these materials with the participants. I want to go back to Bettina. How do IFRS S1 and S2 standards interact with other international sustainability standards, such as the Task Force on Climate-Related Financial Disclosures and Global Reporting Initiative. I think it has been mostly covered.
Well, we've
already.
really answered the question, haven't we?
Yes.
What I would point out is that TCFD was actually disbanded in 2023 because we've just heard it in certain areas. IFRS, especially S2, is almost a copy paste of TCFD. Therefore, everything that has been picked up into IFRS S2 comes from TCFD. When people go on the TCFD website, they will actually get a notice saying TCFD is disbanded. But that doesn't mean that it's not relevant anymore. It just means that it is now embedded in the international standard. What I would say, I mean, it's very, we've heard it, IFRS S1 and S2 have a clear investor focus. That is one of the main differences to the European standard CSRD, for example, where we've also heard that SASB is obviously the component that covers sector-specific questions, where we need to go to sector-specific areas because that's not covered as yet. SASB is the best thing to look at. I participate in International Federation of Accountants meetings regularly. We were with the GRI CEO in New York a few weeks ago, and he's still insisting that, you know, it would be great to have a global baseline, and that global baseline should be IFRS S1 and S2 plus GRI. But what we obviously have to understand is, and that was also alluded to by Peter, GRI is a lot broader than simply investor focus. GRI is different in terms of scope. GRI is different in terms of the way it calculates materiality. But so there are differences, and people will obviously not use all of them, because if you use all of them, you are likely to duplicate certain things. But you will undoubtedly find components, as we've heard, of GRI and SASB and TCFD in the standards we're looking at today.
Thank you. Thank you very much to Bettina for this clarification, most appreciated. And of course, I'm very privileged that today we have a panelist who sits in the International Federation of Accountants meetings, and feel free to give her comments so that she can take it back and shape the way these standards are going to be prepared. Thank you, Bettina.
Can I give a comment right now?
Yes, yes, please. We're behind the house.
Well, Bettina, the president of GRI is right. It's as simple as that.
Well, he might be right. If you ask people from the European Union, they'll have a different opinion, you know. that's where the whole trickiness of the question comes in. I think where we all agree is, even though the enacting that might be a lot more complicated, I always say we're in a slightly similar conversation at the moment as the one we were in some time ago, when we were saying we have IFRS, we have US GAAP, and everybody was agreeing that it would be great for comparability to have only one global standard. Well, we also know that that didn't really happen. It largely happened because a lot of people use IFRS, but not everyone. And I think now at the moment, we are very much going through the same conversations, that a lot of the motivation behind the European Union stance might be political is a completely different question. Unfortunately, we're not quite there yet with a global baseline.
And I think that's the problem, Bettina. You know, if you still have disagreements with US GAAP and IFRS at this stage on something as basic as financial information. Now, and that's where I differ a bit with you. Sustainability is a whole lot more complex than US GAAP. Or it's a whole more complex than IFRS. I mean, IFRS, US GAAP, they really a walk in the park compared to the discussion on sustainability. For instance, if we're saying, and some of the proponents of ESG, if you asked in this environment where we're having the webinar, whether of the sustainability related risks to all our stakeholders, climate is a big deal, I can tell you at the heart of hearts, it's not. However, if you spoke to any whether you spoke to the Kenyans, to the Ugandans, most decision makers, you will see a lot of it is in a social aspect that is rarely discussed in the sustainability standards, job creation, and yet that's covered in GRI. So, I mean, my prediction is they will never agree. Eventually, we will have to either take a position like the chairman of the ISSB had on Bloomberg the other day, where he just pointed out that we just have to force the whole world and stop them from getting money if they don't adopt. Which then takes us back to why we started our sustainability reporting in the first place. So you can see that it's not about, I think the concept is okay, the problem is what's being measured.
Oh, I agree with you. It's very complex, and that's why I thought some of the answers in the poll were quite interesting. When people say, "Oh, it is," we are very confident that we can adopt it, that we can implement it. There are two, in my mind, there are two reasons for this. Either there are people who are very intimately acquainted with the subject, or, and I see that a lot anywhere in the world, there are people who said, oh, we managed IFRS, we managed US GAAP, we managed whatever, therefore we are going to manage this. And you're absolutely right in saying that the complexity is so much more than anything we've seen so far. And another point, sorry, James, we're running away here with your conversation. But another thing which I want to come back to, just because Peter mentioned it, and it is so, so important, and that's a point to make about, you know, it is not only about the government, about the environment. What's really very important for people, of course, we all have floods, we all have heat waves, we have all sorts of things, but it is so much more than that. It is also about securing the future. It is about securing the economy. It's about securing jobs. And when I say securing jobs, that means providing families with a livelihood, providing education for the children, and really safeguarding the future of all of us. So I think that's what we have to understand when we talk ESG.
Wow, it's much, much deeper. It's not just about figures. It's not just about what we're used to in IFRS. Thank you. Thank you for highlighting.
It doesn't look anything like an IFRS. Don't be fooled. This has nothing to do with IFRS. Nothing like that.
Thank you. This is very, very healthy conversation. Okay, so let's get back again. Thank you for that. That has been very, very insightful. I want to appreciate that. At this point, I want to go back to Eva. Why was it important for the banking industry, especially to bring this framework, the ESG framework? And now, of course, we have to talk about reporting, because you can't talk about the framework and not report about it. Why was this important? What motivated this? I know you've had a lot of sleepless nights putting together the framework. Why?
Thanks, Doctor. And I think based on a discussion, but also so much information that's coming to the fore, you'll find that sustainability is swiftly becoming a crucial global concern. And various typical subjects like climate change, social inequality, corporate misconduct, all those ones are really shifting the market landscape. So you'll find that sustainability is really affecting. When you look at the negative impact, you see that sustainability is at the forefront, but the impact is at the end. So when they see we're seeing this, it's just at the end of the whole process. So you'll see that the reputation and practices of banking, as well as all businesses, is really at stake at this particular point. So to take an outlook of being insensitive or the ostrich outlook or hiding your head cannot work. So we're looking at how we are shifting consistently as a sector, but also shifting the work that we're doing with our own customers and other stakeholders to be a bit more sensitive to what's happening in the environment. Also, for the potential to understand that we must leave our world better off than we found it. We can't be inactive, we can't delay, we can't look at options of avoidance. That's why we took a more proactive action of saying, what does this framework help us be sensitive to? What's in environmental, what's in social, what's in government? What must we do that's a lot more comprehensive? And how can we transition our ecosystem to be sensitive to the requirements that our environment works? So you'll see that a lot of aspects which have been discussed by Peter and Bettina speak about risks and reporting, but the framework is aware to those particular aspects. We understand the risks which are financial, but also all the other risks which come regulatory, reputation, and so forth. So the framework is alive to all those risks, but how are we cognizant of them? How do we manage them? How do we report? And how do we ensure that whatever we do net does not leave our environment and our customers worse off? Now, we have said this journey, and the journey is a long journey, but when you start taking consistent steps, and I think we fall back to the African saying of, if you want to go far, travel together. And that's what we're doing as a sector, moving together consistently to make sure that at the end of the period, we actually are sustainable and are aware and awake to the environment, the impact, and what we can do to transition and do better. So that's it in a nutshell.
Thank you. Thank you so much for putting it together, Eva. I really appreciate. I think what I pick from you is that we can't just sit around and let these things, you know, overcome us at one point. So I think it's really important we do something. We cannot just, you know, keep quiet about these things. So I'm going to be trying to save 30 minutes for questions and answers. But before then, I want to ask, there's one question. If Bettina goes before answering it, it will not be fair to the audience. It's just a question about training and upskilling. And it goes, what are the best practices for training and upskilling internal teams to effectively implement and manage IFRS S1 and IFRS S2 compliant reporting systems, ensuring long-term sustainability and compliance? And I think at this time, I'll even widen it. It could be about any other framework, because the way the conversation has gone today is not just about IFRS S1 and IFRS S2. We also need to be aware of the global reporting initiative and so forth. So because it's important, at the end of the day, the people must be able to prepare this report. So how do you make sure they are trained and they're upskilled? Thank you.
Yeah, thank you. And I would say, I mean, James and you know, HLB, we're accountant, we're advisors, we are auditors. So I would say it's not only the companies that need to be ready, it's also the professionals that need to be ready, because, you know, somebody will have to provide assurance of all of this sooner rather than later. Well, I would say there are several stages you have to go through no matter what you do in terms of upskilling. We already need to understand where we are at the moment. What capabilities do we have, and which ones, where are we, where do we want to be? And that's true in terms of logistics, that's true in terms of budget, that's true in terms of training. And then once we have identified that, you know, when we constitute our team, and that's true for assurance providers, for consultants, but also for companies internally, you know, how are we going to move into this space? For all of those who aren't in the space at the moment, and who might ask themselves, you know, how do I actually get started? Well, you might start, as I said, very often with just asking somebody in your finance team, hey, is there anybody who's interested? Would you like to take this on board? Very often it's the finance team initially. But then we also have to think about, where do we get the technical expertise from? And Peter said it very rightly, it is so much more difficult than anything we have known. And that's true for accountants, that's true for auditors, that's true for CFOs. It is very, very complex. So we will need technical expertise. We can maybe buy it in, maybe want to hire someone, we might want to upskill people, and maybe in very specific areas such as biodiversity, we might also consider, and I think that is becoming quite a common feature, we might want to collaborate with outside experts that we may need on a case-by-case basis, but not all the time. And then, of course, once again, using recognized frameworks, putting proper processes in place is very important, bringing everybody on board, transparency, accreditations, getting formal training. There's a lot of material available, but actually truly understanding the material and how you apply it in your circumstance is not that easy. But as I said, there's a lot out there. The ICAW in the UK is doing like a 13-hour course, which people might consider. It's very cheap, and you don't need to be an ICAW member. 13 hours is easy. It will get you a first idea. The University of Oxford, the business school, is also running something with AICPA and CIMA, 7 weeks, that I have gone through. Very, very interesting course. And then obviously, you know, GRI, for example, they are proposing sessions. You can go onto the website of the GRI and you can do your course. And then once you've done all of that, I would say as a company, communicate. Communicate if you are reporting because it's mandatory, but also communicate if it isn't. That is the way to reach your stakeholders. That is the way to reach even investors, your community. And even internally, I mean, in many parts of the world, accountants and other finance professionals have got an employment issue, a talent attraction issue. Well, ESG is a wonderful opportunity to bring people on board that we may not necessarily have access to, and to offer them a completely different career. And something that we haven't touched upon, but that is key in my mind, a career, and also that is not backward looking, because we're not looking at financials, we're not looking at the past, we are truly looking at the future, and we are co-creating the future. And, you know, that is, I would say that is a path that we can use to really reskill, upskill, and build capabilities.
Thank you. This is really very, very insightful. Thank you very much, Bettina. It reminds me of the current, the recent approaches by the accounting profession, that we're not going to be talking about chief financial officers, we'll be talking about chief value officers. Because certainly accountants are moving away from just the historical financial information, but more into the strategic and overarching parts of spaces of guiding our institutions and our organizations. So thank you very much. That's really, really appreciated. I said I want to serve 20-30 minutes. So I still have 4 minutes. I can call on Eva now. Eva, I want to ask you one more question. I think it's the last one for you. What is the Uganda Bankers Association doing to ensure that the banking industry adopts the use of the newly launched ESG framework, ESG and sustainability framework?
Okay, I know I have literally 3 minutes, so I'll use exactly that. You'll find that the banking sector framework was launched on the 4th of June. This was signed off by all the chief executives, so they committed all their institutions to be able to implement the framework such as it is. The framework has a work plan which shows, based on the 4 pillars I discussed earlier, it shows exactly what we'll do in 12 months, then the next 12 months, the next 12 months. So we have a work plan which is bedded per pillar and specific actions that are coming under it. So you'll see that everyone we do an assessment to see how far have we gone. We have a work plan, everyone is committed to that. Furthermore, you'll see that we've gone through sessions of readiness where people have been told to have undergone training to understand what the framework is, how you can apply it, what changes you must do. For example, how do you do a materiality assessment? How do you embed or draw a communication plan, and so forth? You'll find that as a sector, we have committed or developed reporting guidelines in terms of what we shall report. So we'll have consistency that everyone will say and put up their hands, this is what I've done to make sure I'm committed to the ESG agenda and mandate that I've signed to. We have the support of the regulator, which is Bank of Uganda. They were part of our launch. They've been part of the development of the framework. They know what we are doing. So in terms of what they'll expect us to do is going to be really developed, or going to be guided by the framework that we developed. And you'll see that during last month, the Bank of Uganda sent us climate risk guidelines for our comments. And this is just trying to see the sector is starting to significantly move towards understanding this is the impact of climate, this is how we are going to report, and so forth. So put together, you'll see that we have top level engagement and commitment from the respective boards and chief executives. We have the work plans which will support us. We have the support of consultants and technical expertise. The WBA itself and the Secretariat, we are committed to supporting our institutions in terms of the journey. So you'll see that we are moving lucidly, but we are moving consistently towards ensuring that our framework is embedded, but also implemented from the very large international organizations to the smaller tier 2 and tier 3, consistent support and working together to achieve the industry mandate. So that's what we shall do to make sure that the banking industry adopts and that we shall sustainably move forward to ensuring we embed those particular frameworks in the individual organizations. Thanks, Doctor.
Thank you very much, Eva. I just love your energy and drive and determination to get this thing working. I wish all sectors could come on board with that kind of energy that you're driving the ESG and sustainability reporting agenda. Thank you so much, most appreciated. So I think we'll now get into the questions, and there are a number of questions which have come, but I want to start. There's a question which came earlier, even before the webinar started, from somebody called Bua Shamga. Bua Shamga from Moi Foods SME Uganda. And I will want to give this to Peter. Just in maybe under 3 minutes, what tools can we use to monitor an entity's ESG activities? And how can one account for the expenses related to environment activities carried out by an entity? What tools can we use to monitor an entity's ESG activities? And how can one account for the expenses related to environment activities carried out by an entity? Peter, over to you in less than 3 minutes.
All right. Thinking quickly. Okay, let's first, you said his Moi Foods SMC?
Yes, Moi Foods. Yes, okay. Yes.
What I can say to Shamga Boer is, firstly, I think SASB can have an answer for you, what metrics you want to measure. If you go to SASB, the SASB websites, SASB, that's SASB, you just drop down on your industry. It will tell you clearly, what metrics you can use for your specific industry, and that for those activities. Then, how can one account for the expenses related to environmental activities carried out by an entity? You didn't specify what these are, but I'll give you a clue in what IFRS S2 talks about, because IFRS S2 breaks down between transition risks and physical risks. And in those two, it gives very detailed examples of some of these costs that might come from your environmental activities. Unfortunately, you want very specific what type of costs would be. Are you talking about costs like OPEX or not? But to just give you context on what you find in IFRS S2, should you have done your risk assessment and you find that an asset will probably be impaired, let me use one of the examples in that standard, by regulation, and in your assessment that the regulation has come in place and you cannot avoid it anymore, that asset would be impaired. I think if you're talking about, your question talked about expenses, so I'll just stick to that in its simplicity. If there are expenses, you have to treat them the same way IFRS does. You have to expense them appropriately. I think that James.
Yeah, thank you.
That could help.
Thank you. Thank you for answering it so concisely and to the point. Of course, time is becoming very, 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 very precious now.
Yeah, I know.
Minutes. Thank you so much for hitting the
time.
I'd
like to do better, but time would. But it is well.
Thank you. That's most appreciated. Thank you. This is only the first engagement. We'll be having more of these engagements. Okay, so I would like to read out from the Q&A section. Somebody says, anonymous this time, says, interested how to apply ESG and IFRS for sustainability of pension or retirement schemes. Can any speaker speak to this? Somebody's in the pension sector. Maybe I'll leave it to all the speakers. Maybe Peter, you can start. and then the others can follow.
Okay. Firstly, there are aspects on sustainability that are uniform regardless of industry. So, I mean, what Eva talked about, the governance piece, those are uniform everywhere on sustainability. But again, should you want specific for your pension, please go over to the SASB website. There's some good ideas there at the outset. Then, but also remember now, if you're taking the same approach like Postbank is taking, where we developed specific metrics for the bank and based from our strategy, the best way to start with any sustainability program, but generally with sustainability, is what's important to your key stakeholders. That's the best place to start before you even touch any of these frameworks. Thanks.
Thank you. Thank you very much, Peter. I think that's sufficient. We can go to the next thing. I think some people are requesting if there will be presentation. This will be shared so long as I know all of you registered formally, so we have your emails. We'll share with you the presentations. I also want to inform you that this particular session is live on YouTube, on our YouTube channel. If you go to HLB Jim Roberts YouTube channel, it's live there. So it's being recorded as we are going on. So you'll be able to visit it and listen to it again, maybe over the weekend, and really absorb everything at your own space, at your own speed. So that one is okay. The presentations will be available. We normally also circulate the recordings, so that will be shared, whoever's recorded. Just a minute, I think there's some noise behind me. Let me first put it off. Your thing came on. I don't know what happened. Yeah. Okay, so sorry, there was an interruption there. So what I'm saying, these presentations will be shared, the recording will be shared, the presentations will be shared. The other one is coming from somebody, I've liked it. This is Onesimus Ayaya. Onesimus Ayaya was my team leader when I was still doing assignments with the IMF and the EU. I think we worked together in Ethiopia, in Kenya, in Zanzibar, South Africa, and Lesotho. Thank you so much for asking questions. So he has two questions, and nice to hear. I know you must be in South Africa right now. What is the role of auditors in ensuring compliance and fair presentation? To what extent has the training embraced the framework? Okay. What is the role of auditors in ensuring compliance and fair presentation? To what extent has the training embraced the framework? I think, Bettina, you were handling things around training and skilling. I would like you to take it on that one.
Well, as I already pointed out, you know, there is quite a lot of training available. However, that doesn't mean that necessarily all the people internally and in the whole stakeholder community who should be trained are really trained. And I can only emphasize once again what Peter said. I mean, those standards, regardless of which ones, where you position yourself, no matter whether you position yourself with CSRD in Europe or IFRS S1 or S2 or any of the others, they're extremely complex. And let's not forget, because we haven't really talked about that, we are not measuring numbers. We are measuring many other things. We might be measuring emissions. We might be measuring some kind of factors. Then once it gets to the point of saying, you know, what is an acceptable error rate? That is completely different from the normal environment that people in, you know, finance department, also the advisors and the auditors are. This is very different from what we're all used to. So there are many areas where we need training. And I would really caution people to believe that, you know, we are dealing with a financial statement, so it will be easy to implement. Training is available, undoubtedly, but the amount of time you will need to already get to grips with the standards, they're all very voluminous, do the training, but then also get hold of some application guidance so you truly know how to implement a standard and how to adapt it to your very specific environment, that does take a lot of time. And that is something people shouldn't underestimate.
Thank you very much, Bettina, for that. I think we should all just have to pull up our socks and get into serious training sessions. But the good thing is that there's a lot of training available, even on the International Financial Reporting Standards Board, the GRI website, all these SASB website, all these have a lot of material that we need to get into. So I think we just have to commit ourselves to learning. Thank you very much, Mr. Yaya Onesimus. And I want to see if I can get another question here. There's more questions coming in here. There's one from Moses Otim. I hope it's a question. Let me see. Thanks for arranging this. The focus seems more at the results at organization level and therefore the risk of green dressing. Please seriously consider infrastructure for capturing and monitoring ESG data and quality of reporting. Also look at concerns of no regulation for ESG. It is treated more or less as voluntary. What penalties for non-compliance and who enforces them? Yeah, I think there are a lot of worrying questions around that. I hope the panelists have read that as well. I will give it free. Any of you can go at it. Thank you.
Okay,
yes.
James. So
yes.
It's not so different from what the previous person wrote. Infrastructure for reporting. He's right. Infrastructure for reporting. So imagine you're running a finance team, or you're running a management consultancy that's built literally to report on IFRS. How then do you build an infrastructure to report sustainability? Bettina's talked about it. You're not dealing with numbers necessarily. You're dealing with reporting impact. Reporting impact. That impact, if you come off your stakeholders, what's value to them? What's the materiality concept there is how do you create value for, let's say, if I'm using the integrated reporting framework thinking, that reporting that impact and then keeping that information in such a way that it transcends to the organization and an external reviewer, let's say there's regulation, can actually access it and verify it. It's almost like creating a new company within the same company in practical terms. I'm going through it and it's not pretty, but it's because I have a key stakeholder who that's how they view the company. The other aspects he talked about, regulation. Bettina talked about what they're doing in Europe. Some of the stuff you see on the news or in political campaigns and so forth are some of the problems regulation is creating in this space. But you will find in other jurisdictions, this is not happening. And you have to understand that sustainability, those 4 boxes, impact on environment, impact on society, will create a level of discomfort for some people. So I think all I can say with his statement is I concur with it. Those are my comments, Jim.
Thank you, most appreciated. I think since we're running out of time, that was sufficient. But there is another question I want to catch up with before we move ahead. And someone's asking, is there a community of practice in Uganda to join? Well, I think the nearest I can give you is that the League of East African Directors, where I'm also a board member, and who are partners of this particular program with the HLB Roberts. The League of East African Directors is leading in this particular aspect as well. And we have what we call a cluster. If you join the League of East African Directors, you you can actually join the ESG cluster, and that will give you a commission. So I think it's better you consider joining League of East African Directors. If you need details, please get in touch with us. We can give you details on how to join. Are there capacity building courses in sustainability with a focus on ESG? Certainly. LEAD has been running a number of programs on this, and it is something that even us as HLB Jim Roberts are working with them, we're supporting this. So there are already programs. We already have a partner where you can even get certification from the UK. So I think that is in pipeline. You just need to contact us after the end of this particular program. We will be able to point you in the right direction. A lot of things are already happening. So I also know that one organization called the CEO Summit, who are our partners as well. I'm also a trustee for the CEO Summit in Uganda. And we last year we launched the Sustainability Center. And in that Sustainability Center, we ran a number of sustainability programs on ESG and so forth. So we've just run one, I think, last month. So you could be just in time for the next one. So just keep watching the space and get in touch. I hear talk about auditors and accountants. If this is a reserve of those professions only, I see others that come from social science background, driving ESG in organizations or in companies. I think the panelists had already mentioned this, that when we talk about ESG, it is wider than accountants. It is not about the finance department. I think Bettina talked about that already. It's bigger. We need to be looking at the wider aspects of the entire operations of the organizations, whether it is HR, whether it is humanities and all those things, or even the technical backgrounds. So I want to put it to you that it's not just about accountants, but we're happy to lead where we have space to lead these processes. I'm sure Bettina, Peter, you are happy to lead where there's an opportunity to lead. But this is not just something for accountants, it is for all of us. Thank you. Can NGO integrate ESG given that their work is thematic specific, say environment, health, or livelihoods? I think those questions are from Emmanuel Etono. Now, I would ask the panelists, can you give a shot at that? Can NGOs ESG?
I'll give a shot at it, James.
Yes.
NGOs are the number one problem why we're here in the first place on this subject. So if you go back to the history of the task force for this and that, or the climate this and this and this, they all started as the NGO. So remember they were talking about impact on climate, impact on environment, impact on society. So yes, actually sustainability very much matches with what you do. Yeah. So yes, it's spot on. NGOs, definitely yes.
Thank you, most appreciated. Thanks for that response. I think we're doing well. There's another one. From my friend Onesmus Ayaya. I'm really happy you are really logged on. Thank you for the response. Has Uganda Auditor General embraced audit of performance information, including ESG? Unfortunately, today we don't have a panelist from the public sector, but Mr. Ayaya, I have your contacts. I will check with the Auditor General and get back to you on this. I know you used to do a lot of work with the IMF here in Uganda, and you are certainly interested in knowing this, what is happening around that. Somebody's recording for a link. No worries. This is live on YouTube. If you go to HLB Jim Roberts YouTube page, YouTube channel, you should be able to get this. So no worries about recorded links and all that. That will be available. And we'll also email the presentations to everyone. So I think we're trying to manage our time very well. So at this point, I would like to ask my partner, Samuel Okurapa, partner from HLB Jim Roberts, to really join me and give a vote of thanks to our panelists. This has been It has been awesome. I just want to give it to Samuel to give a vote of thanks. Then I'll get back to conclude to the concluding part of this.
Yes, thank you, Doctor. Thanks for a wonderful presentation today by our panelists. You have really underscored the importance of ESG. I've been trying to gather my understanding of how this can be delivered to our participants. But the team of panelists that have come today were well sought for. Eva was able to underscore the importance in the banking sector, and then there was a mix of having the global insight from our friend Bettina, whom I request that whenever she's called upon, she should always come, because for us, we always don't listen to the content, but your presence globally gives us that that perspective that we're on top of the consulting, on top of consulting, and we have a person who is able to give the insight from the global perspective that can be implemented at a local level, and we appreciate that, and we believe that you will always accept the next call when Dr. Please come in, and we shall appreciate that very well. Peter, thank you. It is a long time when I was with Peter at school, and we were able to, by that time, we were not studying about ESG. We were studying about accounting standards. But today, Peter, you have brought us together again to be able to understand the impact of ESG on businesses. Our economy needs everybody to be involved as we report on the issues of ESG, as we create committed teams to implement ESG and attract investors to Uganda as a result of taking up the ESG aspects. And I thank everybody. I appreciate the fact that we are managing time. Been attending from behind. I was not. I was using a phone because I'm not in office today, but I've been following each and every conversation as regards to ESG because I love the topics as Samuel, and I believe everybody has loved your insights, and we shall always engage you so that we are able to have the information disseminated to the participants, and this is what we need. Next time, we welcome you once more as HLB. We appreciate all your contributions. Thank you, partners. Thank you, participants, and thank you, our staff of HLB. I hope everybody has benefited, and have a nice evening. Back to you, Doctor.
Thank you very much, partner Samuel Okurapa, for that vote of thanks. And I just wanted to make an announcement, just one announcement. The League of East African Directors will be holding the LEAD Convention 2024. LEAD Convention 2024 will take place at the Kampala Sheraton Hotel. If you'd like to be part of that, which I want to believe most of you will be, if you'd like to be part of that, it is available for you to register. I think I have some details here which I would like to share. If you'd like to pay, let me see if I can. If you like to participate in this, it's a paid event. I think there is a subsidized, there is a cheaper price for. It's not coming out very well. Yeah, but you can pay for it. The details, you can contact us, and then we'll give them to you, and hopefully you'll be able to join us on the 25th of this month, when we shall have the LEAD Convention, where there will be another very, very insightful and very important conversation that will be on that should be able to help us to get better as leaders and continue learning and exchanging information with each other. As for the As for the quarterly webinars, we will again be running another webinar in September with the League of East African Directors. But as HLB Jim Roberts, we have monthly webinars. So we shall get to you using the usual channels, and that should enable you to continue participating in these activities. So thank you very much. And in the last 4 minutes, I'm going to give each panelist 1 minute to give one last word. Starting with Eva. Your last word in less than a minute.
Thank you, James. And I'll use my 1 minute to thank you for having me and us as a sector weigh in on the ESG conversation. It's an important conversation. It's an important journey for us, and we're looking at it in terms of transition. ESG is one of those things that must be taken consistently and must be taken very seriously. We are committed to doing the same. We have colored the steps we shall take. We are very lucid about the journey. We have the commitment and support of our regulator, as well as all the captains of the industry, so to speak. So it's a very important agenda, and it can't be put off. It's a discussion to have today, and I'm happy to weigh in on the conversation as in terms of reporting, as it ultimately will end up on that particular point. Thank you very much for having us, and have a great evening.
Thank you very much, Eva, for that. Thanks for committing your time to participate in this, and really to bring a very good case study of one sector which is taking a lead in ESG implementation. Thank you, most appreciated. Next to you, Peter. Your last word in less than a minute.
Well, the conversation around sustainability can seem so far, but what I can just leave with the viewers, with the guys on the call is simple. Yeah, sustainability starts from your stakeholders, and the stakeholders on which your business model is built to serve and to impact. If you understand what their needs are, you're on a very good journey, on a sustainability journey. The frameworks available that all the panelists have been talking about simply feed into that. So that's a good place to start. James, thanks for having me on. It's been a good experience. Thank you very much.
Thank you so much, Peter. And finally, to our very own Bettina.
Well, first of all, thank you so much for having me. Like last time, it's always a great pleasure. It's always incredibly interesting to get your perspectives. And I would say, we've lived for the longest time in a world where companies, especially listed companies, were all about profit. Now it's more about creating value. And value doesn't just mean profit. Value means many things. And I've already mentioned, it is about safeguarding everybody's future. And that means employment. That means riches in terms of for the family, riches of education, and access and availability for anybody worldwide. And even where ESG reporting is not yet mandatory, I would say that is certainly a topic that goes far beyond the environment and that really concerns everyone. So it's a call to action. Let's all be interested and move our ecosystem, companies, auditors, consultants, advisors. Let's all move forward in the right direction. Thank you.
Thank you, most appreciated. Thank you, Bettina. Thank you all the panelists, Eva, Peter, Bettina. It has been great, sharing information with you and also the interactions with the participants. We know that we've not answered all the questions, but these questions will be answered. We'll put the remaining questions to the panelists, and they will certainly, once they respond, we'll be able to share them with all the participants who are logged on here. So long as you are registered for the webinar, we'll be able to share with you the responses that have been given by the panelists. So I want to say thank you very much. It has been a great interaction with all of you. We look forward to meeting you at the LEAD Convention 2024, which will be at the Sheraton Hotel, Kampala, on the 25th of July, 2024. And of course, in the webinars. We'll reach out to you again. They happen every month. So certainly August will have a webinar. And of course, September is going to be big because that's when we run our HLB, what is it called? HLB Pro Bono Week. So we shall have an entire week of webinars and interactions that will happen somewhere in September. So these next 2 months are going to be extremely heavy, and we'll be with you and we'll be engaging. It is our commitment to make sure that the people, the society, that the communities where we live are empowered to know what's happening, and we're here for you. Thank you very much, and bye-bye. Thank you.
Bye.
Thank you.
Bye-bye.
Bye-bye. Enjoy your conference in Prague.
Thank you very much.
Yeah, thank you, Samuel. And thank you, Peter. Thank you, everyone. Thank you. Bye-bye. They should put it down, I think.